Could saying no to a raise actually boost your career in the long run? Let's break it down. Welcome. Every day, I break down personal finance questions asked on Stack Exchange, highlight the community's best answers, and sprinkle in some actionable takeaways. If you're into learning a little more about money each day, make sure to subscribe to the channel. Now let's dig into today's question. Today we're exploring a common question. Why might someone choose to turn down a raise? Here's the original question as it was posted to Stack Exchange. I'm going to scroll through it quickly so you can see the whole question, but feel free to pause the video if you want more time to read it. Don't worry. After this, I'll walk you through the key points of the question so you get the big picture. So to sum it up, someone's thinking about turning down a raise at work. Last time, a raise bumped them into a higher tax bracket, so their take-home pay barely increased. Now they're wondering if there are benefits beyond just the money, and if saying no might actually be a good move for them. Here's the top-rated answer from the community on Stack Exchange. I'll scroll through it quickly so you can see the full answer. Feel free to pause the video if you want more time to read it. Don't worry, I'll highlight the key points of this answer in just a few moments. One response points out that while rejecting a raise isn't usually wise, putting the extra money into a 401k can reduce taxes and retain benefits. Income boosts can lead to losing benefits like a healthcare credit if earnings go too high. Smart financial planning, like adjusting 401k contributions, helps manage this. Now, before we jump into the next part, if this video has been helpful so far, be sure to tap the like button and subscribe to the channel. We post new personal finance videos every day to help you make smarter money moves. Here's another answer that was shared in the Stack Exchange thread. Like before, I'm going to scroll through it quickly, so feel free to pause the video if you want to read it yourself. Otherwise, I'll highlight the main points of this answer in just a few seconds. One response points out that high salaries can make employees targets for layoffs during tough times, as companies might replace them with cheaper workers. However, accepting a raise can boost future salary potential and earnings while still employed. Here's one last answer from original post on Stack Exchange. I'll quickly scroll through the answer so you can read it. Feel free to pause the video if you need more time. And just like before, I'll be highlighting the main points of this answer for you in just a few seconds. One response points out that accepting a small raise could postpone eligibility for a bigger pay grade bump later on. It's important to review company HR policies, as they might limit pay grade changes after standard raises. Alright, now that we've seen what the community had to say, here's our take on this question. Accepting a raise might result in losing government benefits, like tax credits or healthcare subsidies. It could also affect future job opportunities, as some companies delay promotions if a recent raise was accepted. Plus, a higher salary might make someone a target in layoffs, as employers often cut higher-paid employees to reduce costs. So in this video, we've covered how accepting a raise can sometimes mean losing valuable tax credits or healthcare subsidies. While companies might delay promotions, higher salaries can leave employees vulnerable to layoffs during downturns. However, raises boost immediate income and can strengthen future salary negotiations. Thanks for watching. Before you go, did you learn something new from this video? If so, be sure to drop a like on the video to let us know.